Welcome to the Accounting Profits and Prosperity Show. I am your host, Louis Prosperi. My guest today is an author and speaker who has written books such as Never Lose a Customer Again and Never Lose an Employee Again. Please welcome to the show, Joey Coleman. Hi, Joey. Thank you for joining us today.
Louis, thanks so much for having me. I so appreciate it. And thanks to everybody who's listening in. I am really looking forward to this conversation, and I hope you're going to enjoy it as well.
I am going to enjoy it no matter what anyone else thinks, because I did read your book, Never Lose a Customer Again. After I've read that book, I'm definitely going to read your book on Never Lose an Employee Again, to be quite honest. And in our industry, both of those things are critical. I know right now because of what do they call it, the Great Resignation or whatever.
Yes.
That your second book is probably more valuable, but I'd like to focus really on Never Lose a Customer Again, because that is really important no matter what industry you're in. And what made you want to do that book?
Well, a couple of things triggered that, Louis. I was running an ad agency at the time. And so my job was to get new customers for my clients, right? How can we fill the funnel? How can we market? How can we sell? And I did a huge project for a client where we really moved the dial. We got him a bunch of new customers. And I went to them about 4 months later, and we were talking about what the plans were going to be for the next year. And I said, all right, so what's our budget going to be? And of course, I'm thinking, we did a great job. We're going to have more budget. We're going to be able to do more things. They said, well, actually, we got a lot of new customers, but we haven't really been able to keep them. I was like, why haven't we been able to keep them? They're like, well, we don't know. And this led me to investigate why it is this company, and as I quickly learned, many organizations struggle with this idea of transitioning from acquisition to retention. They struggle to keep the people they've worked so hard to get. And that sparked research, that sparked analysis, that sparked coming up with ideas and almost running it like a laboratory with all of my agency clients trying to figure things out. And that was about 20 years ago. So throughout this entire time, I've been figuring out and piecing together, well, how do we do this in a strategic and intentional way that is also enjoyable for the people that are creating the experiences for the folks they serve?
So one of the things that I found very interesting, because everybody knows the mechanics, right? How to acquire a customer and the how-tos and the part of their service and so forth. But something that I really love, and this is dear to my heart, you called it brain science. And what I really loved about that comment was we forget to focus on the emotional component. If you could just explain that a little more, and why that is probably just as critical as all the other techniques we use, but maybe more important. If you could just expound on that, that would be great.
Absolutely. Well, Louis, here's what I know about everybody listening in. They have clients in a variety of industries. Some of you do the accounting services for restaurants or small businesses, or maybe a manufacturing organization, a mom and pop shop, a place that has multiple locations, places that are doing business in multiple jurisdictions. So you're dealing with different types of codes and tax law in different spaces. But here's what I know is true about every single one of every listener's clients. They're humans. Every single one of them. If you don't have humans as a client, please reach out to me directly. I would love to learn more about who you're actually serving. But we all have humans as clients. And what brain science tells us about the human condition is that when we make a purchase, when we sign up to be represented by an accountant, we sign up to have somebody handle our books, we sign up to have somebody take care of our taxes, our brain floods with dopamine. We feel joy, euphoria, and excitement. This is the accountant who's going to be the answer to my prayers. This is the person that's going to help me keep more of my money and not have to give as much as way into taxes. This is the person who's going to make sure that I have enough cash at the end of the month to propel me into the next month so that I'm not overspending, underspending, etc. But almost as quickly as that dopamine floods our brain, it starts to recede. And as it recedes, those feelings of joy, euphoria, and excitement are replaced by feelings of fear and doubt and uncertainty. What if this accountant isn't everything they were cracked up to be? You know, I sat in the meeting and I read their marketing materials and I listened to their pitch, but now that we've signed up and we've started to pay them, you know, I never really liked numbers. That's why I hired an accountant. You know, how do I know that the numbers are the right numbers? How did I know that they're putting them into the software the right way? These reports that I'm getting, I've never had these reports before. What am I supposed to do with these? All of this fear and doubt and uncertainty creates a sharp difference between the client's emotional experience and our emotional experience. See, we're celebrating. We signed the new client. We're high-fiving, ringing a bell. Maybe someone just won a trip to Cancun. I don't know. Everybody's excited
Right.
that we made the
Okay.
sale.
Yeah.
Meanwhile, the client is doubting whether or not they made the right choice. In common parlance, we call this buyer's remorse.
Right.
Almost everybody has heard of the phrase buyer's remorse. But if I were to say to you, do you have a system and a process in your business designed to address the buyer's remorse that brain science tells us every single client is going to experience? Very few firms do.
So that's great, because what I really got about that is there's no way avoiding a buyer's remorse. It's a natural. So no
Yes,
matter how well you did on the sale, no matter how good they feel, everybody, and it doesn't matter what industry you are, even in the accounting industry, what we think we're infallible, but the reality is, uh, our customers also feel buyer's remorse. And I
yes,
love, so let's just delve a little bit about buyer's remorse. One of the things that I read in your book and I thought was really interesting, because in our industry, the primary person that brings in the customer in most cases, like, I mean, depending on the size of the firm, but small firms, it's the partner. It's
right.
he brings them in, he talks to them, and he gives them a level of confidence and security that partners can do because of where they are in the process. But the next phase is usually not him. So, and I think that's critical, because the handoff, which you also talk about critical, is that's probably the most next critical thing. That's probably the what is the, I call it the handoff. You probably have a different term, but how do you deal with the handoff, and what things should you put into your process to make sure the handoff is done right? Because now they're in buyer's remorse, correct? That's where they are right now. Is that correct?
100%. So the buyer's remorse, they're fully feeling that. And by the way, the research also shows the higher the price tag, the greater the buyer's remorse. So we
Interesting.
have buyer's remorse for buying a pack of gum at the checkout counter, but it's very fleeting. It hits for a second. We have a little opportunity cost loss, and we move on. We don't think of it. When we're buying something substantial, this
Right.
is why when we buy a new car, we drive home and we see, wait, everybody's got the same car I have. Oh, I shouldn't have gotten this car, right? Or we buy a house and we're like, oh my gosh, did I buy it in the right neighborhood? With all due
Right.
respect to our accounting friends, accountants have a general rule of falling into the higher cost items that person is probably paying for on a monthly basis,
I think,
and
Joey,
well
you're gonna have a
deserved.
Joey. We're gonna probably, they're gonna say, well, we're never paid enough. So I'm just being
Oh,
honest with
absolutely.
you.
I'm not saying you're not paid enough, but what I am saying is I believe almost every one of your clients thinks they're
Yeah,
paying you too much.
that's right.
Right?
No, no, you
So
absolutely,
this again, we need to, whenever
absolutely.
we're talking about our client experience, we need to step
Yeah,
out of our experience of the world
correct.
into their shoes for their experience. So they're
Yeah,
thinking they're paying too much. They're deep
yeah,
in buyer's remorse. They're having these feelings. And then what do? We hand them off to someone else in the firm, a more
yeah,
junior partner, a more junior member, a bookkeeper, any number of positions we might have in the organization that is not the partner that did the selling. Louis, I liken this stuff to dating. Okay. You meet someone across a crowded room, you saunter on over, you strike up a conversation. One thing leads to another. You exchange phone numbers, or kids these days, I think, do Instagram handles, something like
sure,
that. But
sure.
moral of the story is you decide to meet up for lunch. Why for lunch? Because it's not as big of a commitment as dinner. You have a good lunch. It goes okay. You decide to go to dinner. You go to the show. You meet the
Yeah,
friends. The friends approve of you. Finally, you meet the parents. The parents approve of you. Suddenly, someone's down on one knee saying, I want to be all in. I want to be in a
right,
relationship with you.
right.
And so when they say yes, we're absolutely thrilled. We host a big kickoff meeting, I mean, wedding reception. We get
I love this
everybody together.
analogy,
We get
Joey. I
everybody
love this
together to
analogy.
celebrate this new relationship. And then we grab the hand of our beloved and we walk towards the honeymoon suite. We get to
Right.
the honeymoon suite, we throw open the door and we say, hey, honey, I'd like to introduce you to Louis. Louis our bookkeeper. He's going to be responsible for getting your account up and running within the firm. And after that, I'll come back to spend some time with you. Louis didn't go on any of the dates. Louis wasn't part of the courting process. Nobody even knew who Louis was until the wedding night.
Right.
This is the problem most accounting firms have.
Yeah.
And the way we solve this problem, the way we make the handoff smooth and effective is we do a couple of things. Number one, we make sure that the client knows that the firm is bigger than the partner. And the way we do that is the partner speaks positively about the team and references them by name as part of the sales process.
Mm.
So if you know you're going to hand off to the junior person on your team named Juan, you tell the client when you're meeting with them, hey, one of the benefits of choosing our firm is not only do you get Joey's expertise in accounting,
Right.
but you get Juan's expertise in accounting. You get Juanita's expertise in bookkeeping. You get Marco's expertise in this. You get blah, blah, blah. And you introduce who the whole team is so that the person understands they're going to be served by more than one. By the way, partners, this is to your best interest because that means the client won't always be calling you. They'll actually call the people on your team that you want them to call, but they
Right.
default to calling you because you went on all the dates with them. So the first thing is we do is in the sales process, we make sure they know who they are. Then when we do the handoff, we don't do the handoff under the cover of darkness. What I mean
Right.
by that is
Yeah.
we make the client part of the handoff. And by the way, an email handoff is not the most effective handoff you can do. Now, in certain situations, an email handoff is appropriate. After you've been in business with this firm, you've been taking care, this accounting firm's been taking
Right.
care of this company for 2 or 3 years. They send you a message. You can say, I'm going to copy my assistant, Frederic. Frederic will be able to schedule the appointment with you or something. It's
Right.
okay to do handoffs via email once the relationship's established. Before that, what I want to do is do handoffs in person or do handoffs via video or do
Right.
handoffs on a Zoom call or something like that where they actually see the. And when you do the handoff, the secret here, partners, is to make sure that we're elevating the status of the person we're doing the handoff to. So let's
Right.
pretend I'm a partner. Let's pretend Louie's the bookkeeper. I'm going to hand the client off to Louie. What I would say is, hey, I'm super excited for the call today. As I told you during our conversation, the brains of the operation, when it comes to getting your account set up in our system, making sure that we have the right numbers, we're connected to the right bank accounts, we understand all your filings, is Louie. Louie is genius at this stuff. Our firm wouldn't exist if we didn't have Louie getting all of our clients set up in the system, set up in the process so that we make sure we have accurate numbers and accurate recording every month. Louis is going to be taking the ball from here. Keep in mind, Louis is going to be keeping me informed about everything that's going on. So I'm going to know exactly what's going on every step of the way. But you are in great hands with Louis in this part of the process while we get you set up.
That's
That's
great. That's
very, very different than what typically happens. Partner
well.
Joey sends an email. Hey, Bill, thanks so much for becoming a new client. I've CC'd Louis, our bookkeeper. He'll take it from here. Thanks
Yeah.
again.
It's funny because that is so true. And usually the primary reason for a lot of partners, the reason why they do that is time constraints. But here's something that I want to bring up, and you put it in your book. By improving this handoff, and this is a number in your thing where just a 5% improvement in the handoff percent, and I know it's the whole process, but just say 5% improvement everywhere could yield anywhere from 25 to 100% increase in profits. Right now, I hope that impacts
You
the
quoted it exactly. That is what the research shows. And
right,
Louis, just to be clear, yes, it's in my book, but this is research from Harvard Business School,
right,
Stanford Business School, and Frederick Reichheld, the gentleman who came up with Net Promoter Score that many
right.
of the folks listening run within their firms.
Yes.
This has been proven time and time again across all industries. Now, it's not a surprise to me that on an accounting show, I'd be asked to do some math. Okay. I am not the math guy, but let me briefly break this down because when most
Yes.
people hear this number, they think, Joey, this is fake news. The numbers don't add up. This isn't real.
Right.
Most businesses are running at a profit. Each additional dollar that comes into that business is more profitable than the first dollar because
Correct.
we've all covered our basic operating expenses. We've
Yeah.
paid to keep the lights on, we paid the salary. So every additional dollar we get is more profitable than the first. Not to mention that when you are with a client for a long time, each additional dollar becomes more profitable than the first dollar because we've already done the setup. We've already got them in our system. We've learned their cadence of communication and behaviors. We've known where they're good and where they're bad. We've figured these things out. So we're not spending as much time learning. We're spending more time doing. And if we're really good, and I know this is where a lot of accountants really earn their value, we've built enough of a relationship where we're making recommendations for how
Right.
they behave proactively instead of reactively dealing with choices that they made. And so as a result, the relationship is deeper, the relationship is more profitable. So the
Mhm.
reason I say if we keep 5% from leaving, the first 5% that are going to leave are the most profitable dollars because they're the extra icing on the top. We're
Right.
going to have to get down to the last 5%, the last 10% before suddenly we can't pay the rent, we can't keep the lights on, right?
I
So
get it.
that's why keeping them matters. The last thing I'll say on this, and it varies depending on where you're located, but the typical firm sees somewhere between 20 and 70% of their new clients quit within the first 3 months. Now, some people are sitting here saying, Joey, that doesn't make sense. The paperwork alone takes more than 3 months to do. Okay, I get it. But what the research shows is that mentally, going back to that brain science,
Yeah.
they have decided that this is not going to be a long-term relationship in the first 3 months, even if they're still under retainer, even if they're still part of your first 6 months try, whatever program you have set up in your firm, they've already decided to check out and you're just getting started.
That's an interesting concept because you're right. The loss factor for accounting firms, 100 days isn't normal. Like you don't, unless something really went bad, to lose a customer, gain a customer, and lose them in 100 days doesn't happen. But what does happen, and normally it's probably 12 to 18 months, because of the depending on the services we're providing, it takes a while to do them. Is that first 100 days is there is we know they're going to leave because of the attitude and the problems. So you're right. Uh, I guarantee you, if you talk to any partner and go, okay, of these customers, which ones are you thinking? And it's probably because of what happened in the first 100 days. So
Exactly. And
you're
that's what the research
absolutely
shows.
right.
If we don't build the foundation, we don't
Yeah,
ever get to the type of relationship we want. And all
yeah,
of that foundational work happens in the first 100 days. That's when the trust is established. That's when the credibility is established. That's when the systems and the processes are set up. It's
yeah,
also when the communication cadence and style is created. When we first meet someone, we're learning about them. We're learning how they like to talk, how they like to communicate. Are they going to be texting us info or sending emails or leaving late night voicemails? We get to figure that all out early
yeah,
in the relationship.
absolutely. Here's something, and now this might we might actually combine both books here, because how we incentivize our staff or our people with regards to customer service, right, is a key factor. Because when I read in your book about, again, this is on the customer book, not the retention, but when I read about the book, it says, well, we don't incentivize our staffing for the customer experience. Our incentives are completely different. And I got to be honest with you, in our world, it's budgets, uh, making sure that we get it out on time. None of the key criteria relates to customer experience. So talk a little bit about what kind of incentives can we put into our practices that allows us to make sure that our staff, because they're going to be linear focused too, right? That they can then start putting some of their attention to that side of it.
Let me tell a quick story and then we'll apply it to the world of accounting. Years ago, I
Okay.
had the opportunity to work with Zappos. Okay, Zappos, international company selling
Yeah.
shoes, other things, but that's where they started. Highly known for their amazing customer service. In the typical call center, when you walk into a call center, the team is incentivized on how quickly you can resolve the call. What that actually means is you are paid based on the number of calls you take, and the quicker you can get the customer off the phone, the more you make. Let's stop and think if that's the right alignment of values. The customer is calling in with a problem, a need, or wanting to buy something. Your goal is to get them off the phone as quickly as possible. No, your goal should be to stay on the phone until not only have you answered the question they called about, but you've answered any other question they have, as well as maybe even tried to sell them a little something extra.
Fair enough.
Zappos, when you walk into Zappos, they have a big board where they're tracking all the calls and all the information, and they have a prize for the longest phone call. They're the
Wow.
only call center in the world that I know that has a prize for the longest call. The last time I looked at their data for the longest phone call, it was over 8 hours. A single phone call. Now the accountants are picking themselves up the floor right now. They're like, "Oh my
Oh
gosh,
yeah.
Joey, the cost of that, having a person stay on the phone." But it sends a message to the team.
Interesting.
This is actually what matters. The challenge I have with the way many accounting firms are run, not all, but
Sure.
many, is that the incentivization is based on work product and hours billed more than it's incentivized on problem solved and solutions delivered. I'm not saying this applies to every accounting firm, and I know most of your listeners are in the savvy, growth and
Of
learning
course.
minding accountants who
For
are,
sure.
cutting
Absolutely.
edge. That's why they come and listen, right? That's why they
That's
want to
right.
be part of the conversation. But
Absolutely.
in many firms, we have these kind of archaic approaches to how the firm is set up around billable hours, around expectations of how long something should take, fill in the blanks, that
Yes.
doesn't align with the goal of providing a remarkable client experience. One more example from an accounting firm. There's an accounting firm on the East Coast in the United States called LTBD, run by my good friend Tim Hawkins. Tim Hawkins wanted to create a remarkable experience for his clients as well as for his employees. And what he realized is many of his employees were so dedicated to the mission, were so committed to providing great service that they were working morning, noon, and night. They had the hours they were working, but they were still available to clients via phone or email after hours. On the weekend, they were pulling out their laptop for 2 or 3 hours to do some
Wow.
work. This is a high level of dedication of employees. But Tim was smart enough to know that this is a disaster when you think about things like burnout, mental
Yeah.
health, long term retention of your team. So, what Tim
Absolutely.
did is he went to all of the clients, all of their clients, and they said, there is no such thing as an accounting emergency. Okay? There are accounting problems. There are things that require our attention and our
Sure.
focus. But an accounting problem at 10 o'clock on a Friday night is not going to get that much better before 9 a.m. on Monday morning that we can't just wait to deal with it at 9 a.m. on Monday morning. So they wrote into the contracts what their hours were, what their availability was, and the expectation of when they would be responding. And they said, look, we will respond between 9 o'clock in the morning and 5 o'clock at night. But other than that, if you have a message that comes in after that, it will go until the next day, the next business day. So they rolled this out. Great idea, right? Sounds good. Sounds interesting.
Yeah. I
Louis
don't know.
skeptical.
Uh,
Louis skeptical. He's not sure this is a great idea. Here's the
well,
thing,
no, no.
Louis.
I'm just not sure if they follow it. That's because
They
we always
didn't.
start with that because
The
they never
employee,
follow.
the clients, the clients were forced to follow it because the clients were told if you send an email or you call these numbers, the email will sit in a holding pattern and will not even be delivered to the inbox until
Oh,
the
okay.
next morning. So they
Okay.
put a buffer on the clients. But guess what happened? The employees kept still using their computers after hours. So they had to put the same buffer on the employees. So the employees, if they try to log into their email outside of business hours, they get a message that says, you should be spending time with your family. Go for a walk, go to read a book, go do something else. You should not be working right now. This is your time. Don't work. Now, this is a shocking and novel example, but it's an example right, it's a fastball pitch right down the middle. It's an accounting firm. But here's the thing what they found employee retention went up, employee satisfaction went up, client retention went up because
Really?
clients, yes, because clients appreciated boundaries. And clients came to them and said, gosh, I wish my employer would do this. Clients were thrilled that someone in their professional life was saying, we work too much. We
So,
need to unplug.
Joy, I want to stop you right here because I want you to reemphasize because we as accountants, we are always like our natural instinct is to never say no. We say yes
Yes.
all the time, right? That's just our natural thing. And we always feel that if we do put boundaries on our customers, they are going to leave us. And you're saying in this particular situation was the exact opposite.
Absolutely.
Wow.
And the data actually shows that saying no builds a stronger relationship than always saying yes. Because here's the thing, Louis, when we have to say yes to the client, who do we have to say no to? Well, we have to say no to either our families, who we were supposed to go home and be with, but now we have to stay
Right.
late and work. We have to say no to our team members who thought they were going to be able to go home and now they can't because they need to do this extra work. Or we
True.
have to say no to ourselves. I was going to go home and now I can't go home because I'm doing this. I understand the desire. I empathize with the desire to say yes. The best way you can serve the people in your life is not by saying yes to everything they ask. It's by clearly communicating expectations and boundaries and then living those in a way that works for everyone. Given and they're every other business that you think of has boundaries that you accept. It's just
True.
when
No,
we
no.
think about our own business that we have an issue. I don't expect to be able to walk over to the airport right now and walk onto a plane without going through security. I'm expected to go through security. I
Yeah.
can't just go onto a commercial flight on my own. That's a boundary. That's a requirement. I can kick and scream and say, but I want to be able to just get on the plane without going through security. And you know what they'll do here in the United States? They'll happily put me in handcuffs and carry me off. In Canada, they would say, oh, sir, sorry, that's not the way we're going to do it. They'd give us some pats on
No,
the back
no.
and
We have
take care of you. It'd be nicer,
we're
but
similar.
they're not going to let you go through the security. I've dealt with security at the border in Canada. They'll keep you out if they think you're trying to
Yeah.
violate the established
Right.
the parameters. So here's the thing. The challenge is not your clients. The challenge is you getting comfortable with saying no. And the research shows if you say no, clients will actually appreciate that. Now,
By the
will all
way,
clients? Not all of them. Some will be like, well, if you say no to me, then I'm out of here. Great. Thank you. We learned it early in the relationship that you are going to be ridiculous in your request. And if I ever say no, you're going to threaten to quit. Say, great. Then quit. Go ahead. We'll
right.
happily. In fact, let me just go ahead and pack your materials up and we'll just transfer those away. Life is
By the
too
way,
short.
I agree with you. Uh, Getting used to saying no is empowering and also liberating. The thing that I was quite very impressed with your story was that they used tools to mandate, because the hardest thing, and I've been in leadership positions where I tell my staff, I don't want you to work past 5 p.m. Right, but I can't babysit. I can't be there at 5:30, 6 o'clock, and nowadays with the ability to log in, like you said, I don't know what they're doing at home. They should not be doing it at home, but I don't know. And and that was a very clever thing. So I've learned something here. Was there's there are tools out there that we can force our staff to gain good habits, because when they've been in accounting firms, I'm going to be honest with you, overtime and working odd hours and stuff, it's kind of ingrained in you. And that's why we have such a hard retention value. That's why we have a high level of burnout. That's why more professionals that we want to keep in public practice are going into industry. So I
Louis,
really love that
absolutely. This
story.
this is a chronic problem across the major professions. I'm a recovering attorney. Attorneys have the same first steps
Yeah,
admitting you have a problem. There's 11 steps after that. But attorneys have the same problem. Oh,
right,
I
right.
need to bill. And what I like about your example is when you said, and this is something I think all the leaders listening could do a little bit of a look in the mirror on. You said, I can't police my people to make sure they leave at 5:30 or they leave at 5 or whatever time your
Well,
closing
you
time is.
try, but
But you know what you can do as a leader? Make sure that you do. See, here's where a lot of leaders will say, oh, my people never take their vacation. We give them, 3 weeks vacation and they never take it. I say, great. How many weeks did you take last year?
yeah,
Well,
yeah,
I'm the partner. I only took 8 days. Well, how can you, as the pinnacle of who we're all trying to be, we're all trying to earn favor with, we're all trying to curry favor with, we're all hoping to someday be, tell me that you wish people were taking their 3 weeks vacation when you only took 8 days? You've got to take 3 weeks too. You've got to lead by example. Why is it that we as leaders think that our lead by example is limited to how hard we work instead of how we work?
yeah.
There's just as much example there.
Because you're absolutely right. most of the partners are workaholics, all automatic, particularly in the smaller firms. I mean, they don't have the same kind of resources as a mid-sized or large firm, so they do tend, like, they'll work weekends, they'll work after hours, uh, so yeah, it's interesting. I love that analogy. Before we go, there's one more thing that I wanted you to cover, because I know we're going a little long, but this is so much fun. I really don't want it to stop. To be honest with you, was the customer service and customer experience. I guarantee you that when I say we provide great customer service, that's not the same thing. If you could just highlight and let people know customer service and customer experience are really like night and day.
Yeah, and I appreciate this distinction, Louis. I also empathize with the fact that many people use those phrases interchangeably.
Right.
I don't, because I think it muddies the waters. Customer service is the care, consideration, assistance that you provide to a customer when they have a problem, when they have a need. Customer experience is how all the interactions you ever have with a client make them feel. So, customer service is reactive. Customer experience is proactive. It's how you're designing the feelings, the touch points, the interactions. And where I think a lot of firms and accounting firms fall into this category for sure is that they think they're providing great service by being responsive and being
Right.
reactive. That's a piece of the puzzle. Yes, you need to have that, but don't conflate that with customer or client experience. Client experience is the things that you're doing that are proactively going to make your client feel secure, well taken care of, valued, important, relevant. These phrases that all human beings want to feel. But it seems like as soon as we sign on the dotted line and transition from being a prospect to being a client, we're
Yeah.
not as interesting anymore. There aren't as many dinners. There aren't as many invitations to the golf outings. There aren't as many things because it's like, oh, because now we're in relationship. Again, I go back to dating. Think of
Yeah.
all the
Yeah.
things we do in the
Yeah.
courting process. Flowers, little thoughtful notes, little things slipped, into the bag when they're going to work so they find it. All these fun things that once someone is actually in a marriage, we forget it. It's like, oh my gosh, it's that time of year. It's our anniversary. I better get flowers.
But
You
by
weren't
the way,
celebrating anniversaries earlier when you were getting flowers. You were celebrating the fact that you loved the experience of the relationship.
well, since you brought up marriage, I can relate. I did a lot more work during the courtship than I do now. So,
I think we all did. And here's the thing. I'm not saying that means you're bad. I'm saying
no.
that means you're human. Humans
Yeah.
like the chase more than the catch. This
Yeah.
is why, as a general rule, most accounting firms are better at finding new clients than keeping existing clients happy and retained. Most accounting firms, and it's odd that we may be ending on this, so forgive me if I'm offending anyone, right? Most accounting firms believe that retention is about doing the job. As long as I'm getting you your monthly statements, as long as we're processing your payroll, as long as we're taking care of your tax filings, we're doing the job. You're going to stay with us forever. That's
Well,
not true. Those are the ante up chips to sit down at the table and be in relationship. That does not produce long-term loyalty. It doesn't produce long-term retention. And more importantly, it doesn't produce referrals. We don't refer
well,
people for doing the job. We refer people for being remarkable.
right. So actually, the reality on the retention value from accounts perspective, we tend to have a high retention value automatically, but it's because of the cost factor to change.
The cost of switching is so you're retaining them because they dread the idea of having to get started with a different accountant.
Right. That's what I'm
And
saying
I'm
to you. Like,
sorry if your relationship is built on it sucks to leave. So that's why you love me. That is not a long-term valuable solution for running a
I'm not
business.
disagreeing with you, Joy, but I'm just saying that from that perspective. But the what I really about is the customer increasing it by 5%. That's that experience factor. your profitability goes up. So I think to me, it's the profitability of the retention that's more valuable to us by providing a higher customer experience, because then they're not going to be price sensitive. I'm going to be honest with you. That's their
Absolutely.
biggest issue. That's their
Absolutely.
biggest
Then
issue.
they're not worrying about pricing. You know, the other thing they're going to do, Louis, they're actually going to refer new business to you. I have
That's
never
right.
met a partner at any accounting firm globally, and I've dealt with accounting firms on, let me do the math, 4 of 7 continents on the planet.
Fair enough.
Okay. And I
Yeah.
have never had a partner say to me, Joey, we're all good on referrals. We don't want any more referrals.
Yeah.
Referrals come not from doing the job. Referrals come from being remarkable. And if your
Yeah.
whole business model is it's so hard to change once they're in and we've got their systems and everything set up, the cost of them changing, they're never going to leave us. If that is your business model, while I'm not going to measure how long you're going to be in business by a stopwatch, I am able to measure it in a rather short amount of time compared to how long you want to be in business.
Well, from my perspective, it's the profitability, right? Because then it's a price. The way I see it from a professional firm is when you do that, just that part, all it is price. So you're going to go to the bottom, right? It's who can do it the cheapest gets that, and that's not where you want to be. So this was fun. I got to be honest with you. I really enjoyed this conversation. I know we went a little over, but I really enjoyed talking to you, Joey. If anybody wants to get a hold of you or listen to you, I know, because I know you have sessions and stuff. Where can they reach you?
Yeah, so the best place to find me, Louis, is on my website. It's joeycoleman.com. That's Joey, like a baby kangaroo or a 5-year-old, Coleman,
Right.
Coleman.com. My books are called Never Lose a Customer Again
Yeah.
and Never
Great
Lose
book.
an Employee Again. They're available wherever you like to get books. If you like the hardcover, we've got a hardcover. You can take notes in the margin. If you like ebooks, so you can highlight passages, there are
Yeah.
ebooks you can download. If you've liked the sound of my voice in our conversation, there are audiobooks that I narrate. So however you like to consume books, each of the books has about 50 case studies from around the world, a variety of different industries. There's an accounting case study in there in the
Good.
employee book from a different part of LTBD, the firm I mentioned earlier,
Right.
something they do around employee retention in addition to caring about their employees' mental health and burnout. They also do some really interesting things about sabbaticals. So I'll kind of tease that as being a fun one to go, that they have paid sabbaticals for their team
Interesting.
members and
Wow.
what it has done for their retention and recruiting efforts in a world where we have less people going, majoring in accounting at the
Yeah.
university level than at any time in recent history. We have more people leaving the profession to completely change, not leaving to go to another accounting firm. I mean, exiting the profession.
Yes.
It's double digit right now. These numbers are staggering, and it's not going to get any better, friends. We got to keep the ones we have. Sorry, this is accountants should understand this. This is a math problem. If we don't have enough people becoming accountants, we do not have the replacement team that we need for people retiring and leaving the profession. It's a math problem. So what are we going to do? We got to be remarkable.
Well, Joy, thank you so much for being on the show. I really enjoyed it. Hopefully, we can have you back again, and maybe talk about the employment side, or talk about anything. I really don't care what we talk about as long as I have you on the show.
You're
So I'm
very
good.
kind, Louie. I appreciate it. And thanks to everybody for listening in. Hopefully, I know I might have ruffled your feathers about how you think about your firm, but hopefully there were a couple things in there that might change a little bit how you think about the experiences you're delivering to your clients or your team members.
Thanks, Joy. Joy, once again, thank you for joining us today. And to you, our valued viewers, thank you for tuning into this episode. If you haven't already done so, please subscribe to our channel. And don't forget, if you have any comments or feedback, please do so below. Until next time, stay hydrated, always be curious, and above all, stay well.